Bismillahirrahmanirrahim. Welcome to all the students of third year morning and evening accounting department. I hope all is well at your front and Ramadan is going on good as well. This is second recorded lecture. In previous lecture, we have solved numerical under vertical analysis. I again repeat the definition of the vertical analysis. Vertical analysis is a method of financial statement analysis in which each line item is listed as a percentage of a base figure within the statement. Vertical analysis can implement upon two statements. The first one balance sheet and second one income statement. Previously, we have solved question under vertical analysis of balance sheet. Okay. Today, we will conduct vertical analysis on income statement. Here, I want to add one thing. All the students, please must remember horizontal analysis implemented upon three statements. Horizontal analysis that we already have seen. Horizontal analysis implements upon three statements: balance sheet, income statement, and statement of retained earning. Whereas vertical analysis implements upon two statements: balance sheet and income statement. Okay. In previous recorded lecture, I have explained all about balance sheet, and today I will solve numerical of vertical analysis for income statement. All right. Now I will use Microsoft Word and I will solve step by step, and then we will see the interpretation. Okay, this is the numerical. All the students, they have the hard copy slides, slide number 20. Okay, the numerical is there. I will use the Word in order to solve step by step. Here we go. I will write each and everything. First of all, here all the entries. This is the income statement of Quality Department Store Incorporation, condensed income statement. It is for the year ended December 31. Here we have the data of 2 years, 2018 and 2019. I have drawn the columns. First I write sales, and the value of sales I will write here 2195,000. Then we have sales returns, sales returns and allowance, and okay. Then after that, net sales, and the value of net sales is 209,700, and the value of sale returns and allowance is 98,000. 98,123. Then the cost of COGS cost of goods sold. I write full form: cost of goods sold, and the value of COGS is 128,100. Then after it we have gross profit, gross profit, and the value of the gross profit is 816 816,000. Then after that, selling expense, selling expenses 2, and the value of selling expenses 253,000. Then after that, administrative expenses, expenses 104,104,000. Expenses. Then total operating expenses, total operating expenses, the value of total operating expenses 357,000. Income from operation, other revenue and gains, interest and then after interest and dividend, next is other expenses and losses, other expenses and losses, interest expenses 36,000. Income before income taxes, and the value of income before income taxes 432, 432, 432,000. And then second last, income tax expenses, income tax expenses 168,200. And the last one, net income, 263,800, 263,800. Now kindly keep in mind the rule, the formula of vertical analysis, that is each item on income statement divided by net sales. Here this is net sale, that is a base amount. Okay, this is a net sale, that is a base amount. I have written the formula: each item on income statement divided by net sale is base amount, multiply by 100 and you will get the value. Okay, for example, here 2195, the sale, this is the sale, the first line, 2195,000 divided by net sales. Here net sale, the value of net sale is 2097,000, multiply by 100 and it will be the answer will be 104.7%, and we will write here 104.7. okay guys, this is same. By this way you have to calculate each item. Okay, each item divided by the base amount, that is net sale. Okay, sales return and allowance divided by net sale, COGS, cost of goods sold, divided by net sale, selling expense divided by net sale. So we calculate one by one. So this is the formula. Keep in mind the formula is very simple of the vertical analysis. Actually we divide each item with the base amount. Okay, if you see the previous question that was on slide number 17. Okay, in previous recorded lecture, slide number 17, this is the vertical analysis of the balance sheet. Okay, last time we solved this one. If we go, this is, see here, as you people know, the balance sheet having two sides, so it means two bases will be, one base, then one total asset section, and the second total of total liabilities and stockholders. See, this is the total asset. Okay, 1835000, and the second base of the liability section is 1835000. We have divided 1020000 divided by total asset, then plant asset divided by total asset, intangible asset divided by total asset. Okay, and it will become 100%. Okay, this is 100% total. Okay, both years. Same by this way, liability section, current liabilities divided by total liabilities and stockholders equity, long term liabilities, that is 487500 divided by total liabilities, and you will get answer answer here. Okay, and it will be 100% of liability section. Okay, in both years it is 100%. This is okay, 100%, and here also 100%. Okay, asset section. So it was the previous question, vertical analysis of balance sheet, and today we are solving income, vertical analysis of the income statement. I have drawn the whole question. This is the question in your chapter slide number 20. Okay, now one by one we solve the values. Here now, sales return and allowance divided by net sales. This is the base amount. Okay guys, this is the base amount. Okay, this is the base amount for all the items, each item divided by the base amount. Okay, this is a sea green color, 209700 in case of income statement. Okay, in case of income statement, base amount is net sales. In case of the balance sheet, there are two amounts, asset section and liability section. Base amount of asset section and base amount of liability section in case of balance sheet. Okay, now it is sales return allowance 98000. I divided by 2097000. The answer will be 4.7%. Okay, same, and here it will be 100%. Okay, because this is base always 100%. Now okay, now you will see the sales, the value of sale is 104. Okay, we didn't add 4.7 because this is sales return and allowance. Mean why we are extracting 4.7 from the sales, because the quality department, they sold the item and this is replacement. Okay, this is return. So that's why if items will come back to the company and company will give the cash to the customer. Okay, this is return. So this amount 98,000 the company has given back to the customer. Okay, so this is the reason we did minus 4.7 from total, and it will become 100%. This is big. See, sales return and allowance. Sales return, this is just sale, there is no allowance. This is sale return, this is the complete name of the transaction, so it will become 100%. Now the COGS, cost of goods sold, this amount divided by net sales. Okay, I calculate and the value will be 61.1. okay, 61.1%. Please keep in mind, all the students, the same way you have to solve during the final exam and midterm exam. You have to draw the columns for both here 2019 and 2018, amount column, percent column, then amount column and percent column. The same way you will solve in exam. Then again, gross profit divided by, this is amount 816000 divided by net sales, multiply by 100, and it will be 38.9%. 38.9%. Okay, then selling expense divided by net sales, multiply by 100, it will be 12.0%. okay, so by using the same formula we will calculate each item. Administrative expenses, that is 10400 divided by net sales, multiply by 100, and the answer will be 5.0. okay, then the next one, total expenses divided by net sale, answer will be 17.0. okay, so by same way you will solve all the items. Then income from operations, other revenue and gains divided by net sales, it will be 21.9. sorry, 21.9. okay, Then interest and dividends divided by net sales, okay, it will be 0.4 percent. Other expenses and losses divided by net sale multiplied by 100, it will be 1.7. All right. Income before income taxes divided by net sales multiplied by 100 and 20.6%. Income tax, okay, that is 168,200 divided by net sales 2097,000 multiplied by 100, and answer will be 8%. 8.0%. And the last one, net income, again the same formula, net income divided by net sales multiply by 100, and answer will be 1 to 12.6%. All right, we have calculated all the values of the year 2019. Okay, might be in slide the year is different, but 19, 16, 17 year doesn't matter. Okay, do not worry about the year. So by same way, by using the same formula, you will calculate the value of 2018 years. For example, sales divided by net sales, the answer will be 106.7%. Then sales return and allowances divided by net sales, it will be 6.7%. 6.7%. And here it will come total. Again we are extracting, we will minus sales return from the sales, because this is company has received the items back into the warehouse and the company has given the cash to the customer. Okay, and it will, if we will extract 106.7 minus 6.7, it will be 100%. So this is the base. Okay, so by same way, please you will calculate all the values here. I have calculated all the values. The last one, net income 208,500 divided by this amount divided by net sales 183700, and it will be 11.4%. Okay guys, now we have calculated all the values. The next phase, that is a more important, interpretation. How we will understand the answer, this percentage column, how we will interpret the answer, yani how we will compare the existing year with the previous year, and how we will understand company's performance of the company, performance of the company is at boom or decline, financial position of the company is strong, not strong. So we will interpret the answer that we calculated these all values. Here you have to see, all the students please keep in mind, you have to see the major changes. What are the major changes take place between both years, last year and this year? And we will not see minor changes, we will see the major changes and major items, and upon the base of these items we will take the decision, either a financial position of the company is strong, company is growing or not. So we see the interpretation. If you go to the slide number 21, this is the interpretation. This is illustration 18.9, means this is a question, shows vertical analysis of qualities income statement, cost of goods sold as percentage of net sales. This is the cost of goods sold as any base amount. Okay, COGS of net sales declined 1%. See, cost of goods sold as a percentage of net sales declined. See, COGS means the expense. We will see the expense 1% declined. Before it was previous year it was 61.1%, and this year this is 62 point sorry, it's opposite. Last year the cost of goods sold, it was 62.1%, and now this year 61.1%. If we see the calculation, see, this is COGS, cost of goods sold. Okay, last year it was 62.1%, here we see I have highlighted these three things, these three things mentioned slide number 21 in shape of interpretation. Okay, first I explain, then I come back here upon slide number 21. See, this is income statement. Income statement tells us about the expenses and income. Okay, see, cost of goods sold, this is expense. Last year it was 62.1%, and this year 2019 61.1, means last year our expenses was 62% and this year the 61, means we have decreased the expenses. And other total expenses, total operating expenses, last year it was 17.4 and this year 17.0%. Already we also decreased the total operating expenses. As see the figure, last year it was 17.4 and this year 17. And the main thing in income statement, that is net income, any pure profit after extracting all the expenses. Okay, see, last year it was 11.4% and this year profit increased, our income increased, that is 12.6%. This thing indicates that financial position of the company is stronger as compared to the last year. Okay, we will take the decision upon these three items. Do not worry, even in exam the question it will come vertical analysis of the income statement. Keep in mind these three changes. Okay, for your convenience I say these three changes. And see the major element, that is income. Okay, last year it was 11.4 and this year 12.6. Okay, clearly anyone can understand any last year as compared to the last year, this year the financial position of a quality department store is more stronger. If we see the expense section, we already decreased. Last year it was 17.4, this year 17.0. see COGS 62% and this year 61%. So upon these three major changes, we will say that company's financial position is better than the last year, company growing up. Okay, financial position of the company is now we go back. See, this is the last line. Quality appears to be, any quality department, the name of company. Quality appears to be profitable enterprise that is becoming even more successful, means upon the development stage. Okay, this was the interpretation of the question, that is upon slide number 21, and I have solved each item. This is the solved one. Okay, in exam you have to solve the question, you have to answer by same way. Okay, by having each column amount, percentage, then to different year 2018 amount, percentage, and you have to calculate. And after that you will write here, you will write the interpretation as it's mentioned here, slide number 21, these 2 3 4 lines. Okay, this is very easy, three things are there. Upon these three things you will take that decision. Okay, these three things were uh, cost of goods sold. Actually income statement tells us about what? Income statements, what are the expenses and what is income. Okay, we compare. Last year our income was 11.4%. Okay, and now our income is 12.6%, means we are at development stage. Okay, and this last line, quality appears to be profitable enterprise and that is becoming even more successful. If someone wants to buy this company, so the decision will be, the analysis tells us so this is profitable business. Okay, and at the end, the last slide, that is advantage of vertical analysis. There is a just one big advantage, I read it as an associated benefit of vertical analysis is that it enables you to compare companies of different size. For example means, let's say Asia Cell and the uh, Korak. Okay, you want to compare upon the basis of vertical analysis, having upon income statement, you will compare your position and the position of your competitor in the market. So this is the just one big advantage. By using vertical analysis, we can compare the income statement of quality department store with JC Penney company. Both are stores. Okay, so vertical analysis tells us where you are and where your competitors are in the market. Okay, so this is just the one big major advantage. All right guys, here the chapter 1 is completed. Okay, chapter 1 is totally completed. In previous recorded lecture, I have solved and I have explained vertical analysis of balance sheet, and this is slide number 17 plus interpretation. Okay, now today in this recorded lecture, I have solved the question vertical analysis of income statement with interpretation. Okay, chapter is completed. Inshallah, next week we will start the chapter 2, that is related to the uh, cash flow statement uh, and ratio analysis. Okay, sorry, no cash flow statement, ratio analysis. Okay, that is about ratio analysis. We will see ratio analysis upon different statement, cash flow statement and blah blah. So once we will start, we will have a look. Guys, go through the must listen this recorded lecture. I have explained each point in detail, one by one. Even the if you see the calculation, so the whole calculation is in front of you. I have written the formula here. Okay, the same formula uh, will apply upon balance sheet and income statement under vertical analysis. Okay, this formula is of vertical analysis for balance sheet and income statement. And if you will have any question, please, once we will meet upon Zoom meeting, so you can ask me. Okay, and I will answer. Hopefully, inshallah, after listen this recorded lecture, it will be clear to everyone. Until that, I take leave, guys. Stay blessed, and inshallah, we meet soon upon Zoom meeting in upcoming class. Okay, have a good day. Assalamu alaikum.